Hello. Welcome to another video from 10x Investor Education. This is purely for entertainment purpose, and this is what I am doing for this week. Please do not take this as an investment advice because I am not your investment advisor. Okay, but let's get to the point. Market has been insane. Okay, markets have been falling. Dow has the worst day since October, almost like 8 months. Okay, so why markets are collapsing? Why Fed is confusing people? How long the market correction is going to go? Is it ended this week? I don't think so. So how long next week? And then when to deploy your cash to buy at the bottom? And also at the end of the video, I'm going to tell what I bought this week, and this is very exciting, and also what I'm going to buy next week. Okay, so let's get to the point. Okay, so what happened this week? So in Fed meeting last week, the Fed chairman said they are seeing more economic growth and inflation more than expected. Okay, so both GDP increasing, economy is booming, and inflation also expecting more than they thought. Okay, but they are not increasing the rates at this point, and they are also not reducing purchasing of mortgage-backed securities and treasuries, which they have been doing close to $120 billion per month. So basically, no tapering yet. Okay, and no interest rate yet. That is Chairman Powell. So that is not what market was expecting, because inflation data for the last couple of weeks has been going up a lot, and people thought Fed is going to increase the rates pretty soon as end of this year or beginning of next year. Okay, that's what people thought. So that's the reason why people actually not getting into the growth stocks, but still adding more financials, more cyclical, more value stocks. Okay, but that was a sudden surprise to the people. That's not what expecting. And then people realized, like on Thursday, people realized, okay, so there is no rate increase in at least for another 1.5 to 2 years. I can buy a lot of growth stocks. Why I'm worried? Okay, that's what people thought. Okay, so and the Fed, the board members are split on interest rate hikes. Okay, some wanted to increase in 2022 and some wanted to increase in 2023, at least two rate hikes. Okay, so within Fed, people are members within people are like on one way and other people are another way. Okay, so for example, on Friday, Minneapolis Federal Reserve President told that he wants to keep US central bank benchmark short interest not change until the end of 2023 because they want to see the job growth come back. Okay, whereas St. Louis Fed Chair Jim Bullard, being hawkish, he warned that basically they are seeing a lot of inflation and they're talking about tapering, which means basically buying these mortgage-backed securities, reducing buying these mortgage-backed securities, and also interest rates probably soon, and also they're worried about housing market. So those are a couple of things people did not like, and people were ready to take profits, and there is huge sell off on Friday. So basically Dow was selling off a lot and Nasdaq was stable, but end of the day both were selling off and people are taking profits and they're cashing out to make sure, expecting more sell off next week and park their money later. Okay, so this is what I'm talking about. This is the insane market. How to have your sanity in this market. Okay, so do you invest still in value, financials, growth, energy? If you missed investing in financials and value at the beginning of this year, then you missed a lot. Okay, so you don't want to miss growth if growth is going to grow for next 6 months to 1 year. I understand you cannot switch between investment growth and value, but you got to invest. If you do not rotate, you are not going to make money. That is for sure. If you do not day trade or rotate, something has to happen, or you need to have a diversified portfolio of some value and some growth and be happy with almost not much returns. Okay, that is the reality. So for example, if you bought S&P 500 ETF Vanguard at $382 a month back, that is exactly right there right now. It went to $393 and it came back with the whole last week. So your money is kind of dead money, whereas meme stocks are growing up every day. So if you are a value fundamental investor, you are frustrated seeing this. Whereas people are buying into GME and AMC, they are making a ton of money. It doesn't mean that I'm asking you to buy those stocks, but I'm just telling you the reality of which I'm also equally frustrated. Okay. So 2 weeks back, heavy money was flowing into financials. Okay, now financials are crashing. You look at financial stocks, Citi has been falling since last 10 days continuously. So value stocks are crashing. Okay, take a look at of Cleveland Cliffs CLF symbol, which is one of my most value stock that I like, and that company gave three times raised guidance in last few months, and they're expecting $5 billion, and now the stock is went down by 6% on Friday. So this is frustrating to see the stock go to $24 and come back to $20 and go back to 19 and $18, right? So same with United Steel. So these are infrastructure stocks, and they make ton of money. You see long-term potential, but short-term they have been like very crazy volatile. Okay, so they have been consolidating, going up, consolidating every time, almost every 2 weeks. Okay, so with both Nasdaq and Dow going down, where do you invest your money? How do you play in this insane market? So this is not what really people thought would happen. Okay, people saw all inflation data and that Fed will increase the rates, but did not increasing. Okay, so I certainly see for next couple of quarters growth stocks, and I'm not like saying take all the money in value and sell growth stocks, but I'm seeing certainly growth stocks for next couple of months. Okay, so this is what, okay, for example, if you take inflation is going to be there, and no matter what you say. So based on the Fed comments, they said we are seeing high inflation, persistent inflation. So the price of lumber, the price of steel, the price of copper has been falling violently. Okay, so that is the reason, one of the reason why these stocks have been falling. So I think inflation is kind of temporary. They might actually come down next couple of months. Housing market will cool down, and then gas prices will cool down. I think people will not see complain much inflation. Then there is not much chance of increasing rates. In either way, I see rates are not going to go up anytime this year or even next year. So based on that, that is at least 1.5 years of no rate hikes, which means growth stocks. Financials started falling. I don't think they will hit the bottom, but long term financials is a hold for me. Okay, so inflation hedges such as gold, Bitcoin supposed to be, they're supposed to go up, right? So gold's supposed to go up, but gold also fell a lot and hitting low. So I not like gold for sure. Okay, so the way I play Bitcoin, as I said, I own Roy and Mara since $2-3. When they touched $70-80, I sold a lot of covered calls. So what I'm doing is I'm buying Mara at $20, $22, and when it goes to, basically Bitcoin goes to 40K, it goes to $30. That's how I'm trading. Okay, so basically you have portfolio. You cannot buy and sell, but certainly you can generate income by doing monthly or 3 month or 6 months covered calls. Okay, that's what I do in my portfolio. So for example, I have a lot of NEO stock. So this month I wrote NEO $50 covered calls. Next month I wrote $60 covered calls. So none of the stocks are sold off. The goal is not to sell off the stock, but to generate 5-10% income. So the you juice out of these stocks because these are not dividend paying stocks. At the same time, I don't want to sell off new at 45, 46 because I believe in long term. So that is what I have been doing. And you probably might have seen my last couple of videos, Atosa Therapeutics, which basically went up to $6, came back to $4. I added more because I'm bullish long term. So I sold covered calls and I sold several puts for $3 and everything expired. So that's money there again. Same with Senseonics, same with MoneyGram. I think every lot of them are doing good. So you got to take a lot of volatile stocks, but good term, good growth potential that are not going to bankrupt. At the same time, juice with covered calls, right? So that's how you can make money. Long term, I still believe in clean energy and infrastructure stocks. Okay, so commodities are in general like they go up, they burst, right? So that's what it is. But I think based on the demand and infrastructure, still I still think there are good long-term holds. And in financials, I added SoFi when it touched $20 last week. Okay, so that is long term for me. So in clean energy infrastructure, charge point is my favorite. Okay, so there is so much pressure on these gas companies, energy companies. So a lot of money getting into this electric play, EV play. So for example, charge point, I added more to this week. Okay, so the charge point 1 month return is 43%. Okay, just to give you an idea. So the momentum is going up for it, and a lot more institutional investing money coming into that's the reason why the stocks are going up. Okay, so you have to, there is nothing you can say, hey, this week is plug is going to go up. You just have to go with the momentum. Okay, so and then stem. Okay, I added more stem last week and this week. Stem. So I said I had a video on plug and stem just 2 weeks back. Go and look at it. So stem went up by close to 80% in 1 month. Okay, so it touched 55 at peak and it came back all the way to $25 and it's now at trading at $34, $35. So 80% return in 1 month. So these are still clean energy long-term plays, growth stocks. Okay, these are not value stocks. These are growth stocks and good growth stocks. Okay, they don't have any short seller report. They don't have any negative slot. But yes, they are very expensive at these prices. But I don't care. I just buy them at $20, $25, sell at $45, $50, covered calls, get like 20, 30% premium. If they don't go that price, not sell off, and then I have the stock, and then I keep again doing covered calls on the stocks. Okay, that's how I've been playing with growth stocks. So again, if you have money, you are not ready to, because growth is expensive. I still add some money to my Voyager account. At the bottom of the video, you can find my Voyager credentials. You can get $25 free Bitcoin if you use that, and that is where I trade my altcoins. So I keep buying altcoins such as ADA when it reaches Cardano when it reaches $20, $10, $30. So averaging it out, and also I invest some money into stable coin because there's no point putting money in bank for 0% interest. So take some risk and buy stable coin at 9% yield. Okay, not kidding, 9% yield on stable coin in Voyager account. Okay, so certainly not as safe as money in bank, but some of the stable coins are pretty stable. Okay, so the next thing, you probably will not like some of these known as closed equity funds, closed-ended funds known as CEFs. So I have a dividend portfolio that I need to manage and generate dividend income monthly or quarterly, and I cannot take a lot of risk in this portfolio. So I keep buying these CEFs when they go down by 5-10%. Okay, so one of my favorites closed-ended fund is BlackRock Science and Technology Fund. The symbol is BSTG. So I will have a separate video on this one. Okay, so I'll tell you why it is my favorite. The reason is because it's growth, and growth is next couple of months, okay, next couple of quarters. So even though market was crashing last couple of days, this particular ETF went up by 2% yesterday. And the 1 month return on this ETF BSTG is 16% and 1 year return is 75%. The 1 month return is 16% and 1 year return on this BSTG is 75%. So there are multiple reasons why these CEFs are not as volatile as stock market, because they do a lot of private investments and they do not trade in the market, so they do not go into this volatility. For example, I have money in fundraise. No matter what fundraise, how stock market is, it gives me continuous income every quarter. It's not as volatile as stock market. It is low, but it is diversified. And same thing with strategy with CEFCs. Okay, so these CEFs, the advantage drawback is expense ratio, which I do not like. But end of the day, if you're getting yearly return of 50-70%, why not pay 2% expense ratio? That's what my logic is. Okay, so again, the summary here is having a diversified portfolio and try to generate income, right? So you need to have financials, you need to have value stocks, you need to have clean energy, you need to have growth infrastructure stocks. That is what you do. And weeks you lose money, weeks you gain money. As long as you generate income weekly this much with all these options and strategies, I think your overall return of the portfolio can easily beat market S&P 500. That is for active trader. If you're not an active trader, passive trader, then going through combination of these covered calls, CEFs is the way to go, and also stable coins. So am I worried with this market? No, not at all. I think most of my puts sold off last yesterday, actually expired yesterday, which means I'm getting a lot of money. So I will use the money, deploy that money to add these positions next week, probably after it bottoms around mid of the week. And that is where I'm going to generate a new passive income. Okay. So this is the summary of this week. I don't know how much you are in this one, but I'm certainly in the market. I'm not giving up. No way I'm selling off. Certainly I have 5 to 10% cash. Most of the time I'm going to deploy it and take advantage of this market bottom. Please click the like button and subscribe. And I do post a lot of updates on Twitter, RK 10x investing. Keep looking at it. As I said, I'm still bullish in Atosa, still bullish on Senseonics, still bullish on MoneyGram, things like that. The videos that I made last couple of weeks, still keep buying at the bottom of some of the stocks and keep generating income. Please click the like button and see you on my next video, which is based on CEFs to generate income and growth, which is BlackRock Science and Technology. I will go through in detail on this ETF and see you on my next video. Thank you.